Welcome to the Same Day Podcast, where we discuss driving incremental business growth and other topics related to real estate, property management, and entrepreneurship. Now to the show at hand.
Matt Zalk here. I'm the host of the Same Day Podcast, where I connect with top business leaders and real estate experts. Past guests include Jay Connor talking about raising private money, and Darren Huang, who has 100 units under management and a host of industrial properties. Today's episode is brought to you by Chris Lyles State Farm. Chris Lyles State Farm helps you protect your most precious assets and investments, whether it's your rental home, auto investment, other investments, I should say, or anything else that is valuable in your life. Call Chris Lyles State Farm for a quick and painless phone call to potentially save double digits on all of your insurance needs. We'll say insurance in Oklahoma is incredibly high, and many carriers have taken huge increases over the last year, but Chris Lyles State Farm can really show you what insurance should cost for similar deductibles and great coverage. Just give them a call. Visit diallyle.com or call his office at 918-878-7771. Today's episode is also brought to you by Keyrenter Property Management. At Keyrenter Property Management, we are a full-service property management company helping our clients buy, renovate, and operate real estate assets. We help our clients build wealth while taking the headache out of real estate ownership. If you'd like to give us a call, do so. Or if you'd like to email us, rather, send us a message at info@keyrenterpmc.com or go to our website, keyrenterpmc.com. Today's guest is Max McGuirk. I love Max, great friend, client of ours, does a ton of stuff in the real estate world. And I should give a shout out to Kathy Portley, president of the Tulsa Real Estate Investors Association, who introduced us to Max some time ago. Max was a high school teacher, and he's been investing in real estate since he was 21 years old with long-term rentals. He's a serial entrepreneur. He owns and operates a DJ and photo booth company in Tulsa, and he was contracted with WWE after college in their developmental territory in Tampa, Florida, 2009, 2010. He joined McGraw and left a little bit thereafter. He was focusing on commercial properties, but he really wanted to just focus on acquisition of his own properties, lease-to-own, contract for deed, long-term rentals, flips, a bunch of other cool stuff. So I'm excited to hear from Max today. Max McGuirk, welcome to the show. How are you?
I'm wonderful, man. Good to see you, Matt.
When's the last time we chatted on the pod?
I feel like it's been almost a year.
Well, can it be that long?
I don't think so. I mean, maybe a little bit less.
Maybe,
I think I was talking to you about my Briarwood house the last time we talked. So
when did you move in?
Oh man, that was a house I was rehabbing. I was in the middle of building my house when we were talking last. I don't even think we brought it up. So
well, it's been a while. Tell me, you're like a real mover and shaker about town. You've always got deals in the works. What are you seeing? What are you seeing in the market? What are you sensing from 7.5%, 8% interest rates? Like what's changed since the 6 to 12 months since we chatted?
Yeah. So I remember talking that like, hey, I feel like a slowdown, but it never slowed down. It slowed down in the wintertime. So I think I told you at lunchtime, I had probably 6 deals that all popped up between after Labor Day till the end of the year. I had a couple more deals like right after the first of the year. And then obviously it's kind of been slow for me just because there's so many buyers in the market from, let's call it March 15th till now. I'm starting to see price drops considerably popping up in the market. I've had 2 or 3 deals going to contract lately. So I feel like the summer buyers starting to kind of calm down just a little bit. School's starting back up. There's uncertainty with the market in terms of the rates. I mean, like, what was it, a week ago Friday? They're screaming recession. And now they're like, no, we're good. We're good. So I think there's uncertainty. You got the election coming. So I think there's people on the sidelines that are not going to refinance until after they know who's in office.
Yeah.
So
how much for the properties that you go under contract and buy ultimately do you think that your competition for those properties are primary or end users, or are they all other investors?
Other investors, 100% other investors. It's very rare that I'm going against a first-time home buyer.
Yeah,
I don't feel that I am, because the stuff that I'm buying generally needs a lot of work, or I'm buying a property that's got a renter in it. And so if there's a house that's got a renter in it, then a first-time home buyer is not looking at that. because like the paint and appliances and stuff like that's probably not going to be what they want.
Yeah.
And then the other side of it is like, I think I told you at lunchtime, I'm doing a duplex that I've had for a little over a year. I paid $75,000 for it, and I'm putting $100,000 in rehab. There's very few lenders that are going to say, "Hey, first time home buyer, here's $100,000 of rehab money." So I'm generally not.
You haven't done this before? Here's the
right?
cash.
Yeah. So generally, I'm not going against the first time home buyer. So, and on those, they're emotional, and I'm not emotional. And so, if my bottom dollar, like the best dollar I can buy is 120, they're going to pay 150, 160. So.
Yeah. So let's talk about the duplex deal. There are plenty of folks that are looking to do additional deals. They've got capital. It's been sitting on the sidelines. They'd love to put it to work. And whether it's a property that's experienced fire damage or has foundation issues or has other warts like the duplex deal, they may be considering, do I want to buy this property that has significant issues or do I not? Let's talk about the duplex deal. Let's talk through all the warts on that project, and maybe some people that are on the fence about investing in projects as opposed to cash flowing properties would, jump off the fence and say, I'm willing to take on a project.
Yeah, absolutely. So that deal came to me from basically just a relationship, it was a guy who I had sold a contract for deed property to, and he said, "Hey man, I found this opportunity." And what's funny is it was the guy that had it that I was talking to, the owner. His dad had it for 40 years, 100%, like enormous amount of deferred maintenance. Just didn't take care of it. Just been sitting there wasting away, low rents. And so immediately when I walked in, it was, there was, you could tell on the one tenant that was in there, nobody had taken a credit check. Nobody had vetted this tenant. And so they were just in there.
How'd you
thank
know?
God they were paying. Yeah. You could just tell five pit bulls,
Okay. Yeah.
Yeah. And anyway, so the property was in really bad shape. And like I told you at lunchtime, man, I came in there knowing corner lot, 27th and Harvard, home run deal, 140, $70,000 a unit. Like, this is mine. And I'm not walking away without a contract. Right. And of course I walked it. After walking it, I walked away with no contract by choice. Right. And anyway, so it was just one of those things that I had to have that same process that another investor might be thinking about, right? Like, how much work do I want to put into this?
Yeah.
Do I want to spend 9 months fixing this thing? And I've said this in the past of when I go to buy a property, when I'm talking to the owner and we're discussing price, and the biggest question I've got is what's behind door number 2, right? Like, I open up door number 1 and that's the property. But when I go to tear up a wall that has, the hot water tank and there's black mold back there, or I go to replace a window and then I feel soft drywall and there's black mold back there. It's just like all the remediation stuff that you got to do. So when I first saw the property, like I told you, when I saw that property, I was less interested. I'd already told the owner, like, man, I'm going to give you a cash offer. We're closing tomorrow. We're rocking and rolling. Got his phone number. I never called him. He called me the next day and was like, man, what changed? And I was just, I did answer the phone because I always answer the phone. And I said, well, let's go get coffee and let's talk. So when I went to go see that house, I was told, hey, $140,000. This guy's firm. He's a real estate agent. He knows what he's got. So I looked at the comps in the neighborhood, 268, 275. There's other duplexes in the area. And then I'm feeling like 27th and Harvard, like this is home run, right? So I look at the property. I could tell there was some foundation, right? It's a concrete slab. I don't like that. 90% of my houses are crawl space. You can brace it up easy. You don't have to bust out a bunch of concrete. So I got scared, to be honest with you. I've been doing it for 17 years. I was scared. And so the owner said, hey man, let's meet. So we met at Panera the next day. And he said, well, what made you change your mind? I said, man, there's $80,000 to $100,000 of rehab that I got to do to this thing, 80 on the low end. And so anyway, so we're sitting there talking, and I walked in knowing we don't have a deal. There's no way we're going to get anywhere near 140. And so he's doing his math, and he said, so $80,000 to $100,000, so you'd be between $75,000 and $80,000 on purchase. And Matt, I kid you not, like it was an immediate response, and it was yes. Like, I don't even know what I was saying yes to, but I said yes. And at that point, it went from heck no to this deal because it's so hairy, I don't want anything to do with it, to I can't get this guy to sign a contract fast enough.
Yeah.
So going with all that stuff, I knew by the purchase price that I had plenty of room of, okay, if the comp's in there 275 and I've got it at 70, like I could darn near tear this thing down, build it new, and I'm okay.
Yeah.
And that did cross my mind quite a bit because there was a lot of work, so once I got the property, it had a tenant in there. They had just signed a lease like 2 weeks before I had talked to this guy. So I had 12 months to live with this guy. No heat and air on either side. One side had a homeless person. I mean, this thing was probably the worst of the worst. And I was just like, man, this is going to be a long ride. So,
did you put heat and air over the course of 12 months? Did you put heat and air into the property?
I did not.
What would you do if they said this person, Max, assumed a lease? The Oklahoma Landlord Tenant Act requires that we have, essential items. Would you just give them space heaters? Like, what would you do?
I'm sure I probably would have. So like, this is not typical Max McGuirk property, right? And so like, I did all I could to buy that property without the tenant, right? So I offered $77,500 for this property, and I said I want the tenant gone. And so the owner said, "Man, I'm unwilling to do that. This guy he's been a great tenant for many years. I've got
great tenant. He's living with 5 pit bulls, and he's got no heat and air."
Yeah. I was surprised.
The best.
I was surprised there was running water. So I said, okay, well, like, what if I, how do I get the tenant out of there? He said, well, I mean, we can lower the price. We lowered the price. I originally thought cash for keys. Like, I'm going to give this guy $2,000 and walk. And so I just leveled with the guy. I walked in, I said, hey, I'm buying your property, but I want you to know that like, I can't start work on the other property because like, I'm going to get, and I wasn't rude about it, but I'm like, there's going to be bugs crawling from both sides. And I'm like, I gotta clear this thing out, the entire thing, air the whole thing out and start over. And he's like, I get it. And I said, so I'm going to honor your lease for 12 months. And I said, and then at that point, I'm not going to renew. And I said, I'm also not fixing anything. I said, if water doesn't work, I'll come in there. I'll fix the plumbing. But I said, otherwise, man, like I've got to gut this thing and start over. And he's like, dude, I get it. And he knew that he was under rent by at least half, like by 50%. He knew. And so I set that expectation to him early, and he agreed. And I said, but I will tell you this: if you stay here and you pay for 12 months and you pay on time, I will buy you a house within reason. We talked about a number, and I said I will finance it to you, so you, instead of paying rent, you'll own it. And he said, okay. And so over the months, he always paid on time. Matter of fact, he paid 4 or 5 days in advance on time. The guy was more dependable than most tenants I've ever had in my life. And close to December, he said, hey, man, I want to ask a little bit more questions about this subject of me buying a house from you. So we looked at some properties, and most of them were just really, really awful, and just stuff I probably wouldn't have. I wouldn't have purchased just because of just the fear of getting it back.
Sure.
And in the midst of, like I told you, how busy the late fall was for me, and I was buying a bunch of property. I purchased this one home, little 2-bed, 1-bath, but it was new roof, new bathroom, new heat and air. I mean, it was just essentially everything he needed. And we looked at a couple things, and we were getting kind of close to the 60-day mark, and nothing really made sense. And I said, hey, tenant, you want to go take a look at this address? I left a key box. He walked in, and I kid you not, an hour later, he calls back. He says, my wife looked at it. We want it. Puts 10% down. We sat down, did a contract for deed. And of course, just like the other property, he's been clockwork, right? So now he's got ownership, right? So he's got a 10% deposit on the house. Every payment's going to paying down the principal, and he's got a home that's his. So that turned out awesome. So when that emptied, we'll go back to the duplex. When that emptied, I had told I'll start this back over. I had a tenant on one side, and I had another gentleman that was squatting essentially, but was watching over the 2-bed, 1-bath unit. And so I had told that person that, hey, you got 30 days to leave because the other tenant who's paying needs to leave. So he's like, yeah, no problem. Well, March 1st comes, the tenant that was paying left and the squatter did not. And so it took me 60 days to evict the guy. And these guys actually went to the eviction court and asked for an extension.
Wow.
So yeah, so it was pretty wild. But I tore everything up. And when I'm telling you, like, I was busting out the slab, I didn't bust out the entire slab, but put some piers in, which, of course, when you shift piers, 90% of this thing is brick. So I had to re-brick some spots of it, brand new $30,000 TPO roof.
Wow. Wow, a TPO roof. So it's a flat roof.
Flat. Oh yeah, yeah. And most of you can imagine most of the top of the sheets of plywood were rotten, so I had to pull all that off. And so anyway, yeah, it was everything: new windows, new electrical panels, new plumbing, new everything.
So
Just had my plumbing.
let me ask you this: the seller offers this thing for 140, then goes down to 75 ultimately.
Yep.
The comps in the neighborhood are 270. If he knew the market so well, why would he not have stuck firm to, hey, it's 140 with a max potential work load of 120, which gets me to 260. And by the way, buyer, you have built in $10,000 of equity. Why would he go down to such a low price, knowing that 100 and X number of dollars would get you to $100,000 in equity in the rehab program?
Yep. So that was a good question. So before I got into this, so a lot of things I've learned in my life is asking a bunch of questions, right?
Yeah.
So I asked that question before I gave him a number, before we discussed the purchase. I said, seller, what do you think this thing is worth fixed? And he gave me a number, and it was under 200 grand. And that was his personal opinion. And he is a realtor, been a realtor for longer than I've ever been a realtor. I've been a realtor for a year. I've had my license. And so his professional opinion is based off of, what he's seen in the area and that kind of stuff. And so I let him make that decision. And so I said, okay, well, if that's what you feel. The other side of it is the pushing factor of him needing to sell, right? Was, could he keep this? Could he make this transaction go longer? Could he put it up for offers and that kind of stuff? He could, but he also had a father who had a trust who was in failing health, and he knew that I need to sell these properties before my dad takes a turn for the worst.
Got it.
And so there was a whole bunch of different things there, and so that gave me the knowledge, like knowing that this guy's chasing me to buy his property. I did feel like I was in a pretty good negotiating position, right? Yeah. So, but he also knew, like, when I told him $80,000 to $100,000, he didn't. I mean, he's probably not somebody that's doing this every day like I am, but he probably said, you know what, you're probably right. And he probably said, man, I've got somebody who's interested. I better hook this guy while he's still interested. So It was a fair deal for him and me. The other side of it, I will tell you, is within 9 months of that transaction, he actually sold me 2 more properties that had tenants in them. And it was the same thing. It was, hey, at closing, I need you to execute a brand new 12-month contract with these same tenants at the existing low rents. And it pushed me into North Tulsa, just barely. Like, one's at Harvard and Admiral, and the other one's at Sheridan and Admiral. And but I mean, like, when I'm telling you, with debt, $490 a month cash flow per property.
Yeah.
You twist my arm, I'll take it.
There's a nice little community at Harvard and Admiral. On the east side of Harvard, it's mostly owner occupied. There's a bunch of cute, like 1920s, 1930s, all brick houses in there. I mean, it's like Admiral Court, maybe. A bunch of there are pockets all over Tulsa that are little gems that like the neighborhood looks like it's 11th and Sheridan or something, 21st and Sheridan. There's some there are some little pockets. So basically, he wanted to avoid the headache of kicking out the tenants himself and or raising the rents himself or anything else, and he was willing to give up a significant portion of his own money to make that happen. And so what advice or thoughts would you give to an owner that was considering making a deal where they had to do a bunch of hard work in exchange for getting a great price on a property?
So what advice would I give an owner? I'd say, hey, I mean, how do you want the transaction to go, right? So, like, a typical transaction, when you've got a realtor and you've got a house and it's not as is and it's on the market, then you got TRR, right? You got the maintenance and repairs of, hey, I want this fixed before I close on it, right? Where most investors that come in, like, I don't change my number. So if I say, hey man, I'm going to give you 75 grand, like, here's what it is. It's as is. I'm not having you fix anything. I'm not renegotiating. This is it. So we peel the Band-Aid off. This is what it is. So if you're an owner and you got a house that's in really, really good condition, let's say you got a good location, then maybe you put it out there on the market and try to get the best dollar. But if it's 40 years of deferred maintenance, it's in a wreck condition, as opposed to, I've seen so many properties go up for sale in the market. Even if they say as is, they'll be back on the market 3 days later, 5 days later, whatever, because the new investor is going to walk in and be like, oh my God, I thought it was just paint, maybe flooring. I didn't know there was going to be piers. So the thing I would say is, if you might give up some equity in terms to have a sure deal, right? Knowing that the guy's got cash. And those are things that you got to vet too, ask for proof of funds and that kind of stuff. So that's what I would say. If I was selling a property, I didn't have the money to fix it, I would want to know that the guy has funds, he can close quick, and there was no renegotiation.
Yeah, no retrading back on the price. That happens. That does happen a lot. People say, I'll give you X number of dollars, and they come back and say, well, I didn't expect that this, and this were going to be wrong. Well,
right.
I'm under contract for a property right now. When I said, let me, I'll write up an offer just to put it in your inbox, and then I'll go inspect it. And he said, no, go inspect it first, and then write me an offer. So yeah. What about current interest rates? Are you finding that it's difficult to find cash flowing properties, or are you still seeing deals out there?
I'm still finding deals. I just bought 2 that were on the market, literally on the market.
MLS deals.
MLS. And so if you ask me, where am I finding most of my deals? I find that there was 2 duplexes off 11th and Allegheny, then went back and forth with a wholesaler who lived in San Diego, but never been here, went back and forth. And I kept asking her, I offered her, she was talking to me every day for 3 days. I said, do we have a deal? And she never responded to me, which means she's dating 3 other people, right? She's working 3 other people. And then all of a sudden it went 10 grand over where we were negotiating. And then I said, well, you know where my number's at. 4 days later, she calls me back and says, hey, can you drop $5 grand of EMD? I've never seen the property. She never got me in it. And I just ended up getting really fired up, upset, just frustrated, because nothing drives me more nuts trying to find a deal that makes sense. And I'm negotiating against you and 5 other people I don't know. And probably I'm just negotiating against myself. So what I found is I've been buying more property off the MLS. Like you said, inboxing an offer. Here's my proof of funds. It's either yes or no. Right. So I might have done 1 deal with a wholesaler in the past 12 months just because they end up just making me mad, and I don't need to have my blood pressure shoot through the roof for somebody who's never even seen this property and cares none about myself. So a lot of the stuff I'm finding is either for sale by owner. A lot of them, I'd probably say 40% of my deals are from past sellers. And they'll say, hey man, I know you've made this transaction easy for me in the past. I got another one. What do you think? And I'm nicer to them on a purchase price, just because, as long as it makes sense, and if there's a tenant in there and it cash flows, then I'll be as generous as I can on the purchase price. So that's where my deals are coming from.
Something to be said about making a transaction easy, being fair and honest and friendly, and hoping that you may have paid a few $1,000s more than you wanted to. You never budge on your numbers. So I won't say you as Max McGuirk, but yeah, I may pay a few $1,000s more than I want, but there could be a bunch of additional properties that are strong cash flowing properties on the back side of that first transaction.
Absolutely. So back to my thing. I learned this in sales when I was selling boats is ask a bunch of questions, right? So one question I always ask. So when we get close to an agreement, I say, hey, do you have anything else? What other properties do you have? Right? Because this was a great transaction. We've got a good communication. I said, I'll close on X date. I'm doing it. Oh, by the way, do you have anything else? I'm always buying, right? And that turns into repeat business, whether it's that same seller or the seller's buddy down the street has a property. He's going to call me. Doesn't have to worry about an agent. And I'll get back into the agent side of it. I've had my license for a little over a year, and I've made $6,000 in commission over the past 12 months. And I've bought 12 houses in 23, and I think I'm 6 or 7 right now. What ends up happening, I bought a house at 24th in Pittsburgh, 2445 South Pittsburgh. I just actually gave the keys to Olivia and your team at Keyrenter.
Nice.
And that house I bought for $115,000. A real estate agent at McGraw, relationship there, says, hey, I got this property. It's only a 2-1. It's a corner lot. I walked in and I was like, oh my gosh. I knew I had gold. I had literally bought 6 blocks down at 30th in Pittsburgh, right down the street. And you guys have that as well. You guys manage and do a fantastic job on that property. And I knew what the property was. And I said, matter of fact, here's my comp. Here's when I closed on it. I'm 6 blocks away. They wanted 125. I wanted 110. And we negotiated 115. And I mean, like from day one, I mean, it's at least a $200,000 house, at least. You know, I put $24,000 of rehab in it. I converted the garage to a 3rd bedroom, new cabinets, granite countertops. And so just knowing your numbers and relationships. The more people I talk to, the more people know I buy houses, the better deals that just land on my lap. So
how does the average person get rental comps for a neighborhood like that? I mean, I guess they can come. Our team's always running rental comps for people and determining what they're worth. But if you don't have a relationship with a realtor, or it's hard to have a relationship with a realtor if you're never actually buying through them. That's the challenge. So people feel, rightly so, abused. You're just using them for the comps, and you're not going to actually pay me a commission. I'm out here doing all this work for you, et cetera. But is there a way through Zillow or anything else where you can actually get real rent comps?
So my rent comps, I mean, you could do that. There's, I'm sure, different websites you can search. But I mean, I always ask Olivia, right? I'm like, hey, for this property, this house, what do you think I could get? Right. The other thing I'll do is you could jump on Zillow and search that immediate, 1 mile area and search for other things like that. What I always try to do is if rents are 17 or 1800, I'm going to shoot mine at 1600. If it's similar in size and condition, then think about $100 or $200 less, they're going to jump on yours first. So that's what I shoot for. The other side of it is when you ask me, like, I listened to our podcast from before, and I talked about my area being from Lewis to Mingo and south. And now I've crossed over Admiral just a little bit. But when you are an expert of your market, like, an address, and you automatically know 1.25, $1.25 a square foot, based off of what you're looking at, or more, less, whatever. So if you can be an expert, like if you wake up every single morning and you're checking your MLS and you know your areas, when an address comes across, you automatically know if it's a price point within your strike place, whatever it is, you jump on it. So it's just a matter of being an expert in that area.
Yeah, I said rent comps and I meant sale comps, but that was a good answer a good answer for the rent comp question that I asked, which is go to Olivia or your property manager, or I guess Zillow, Rentometer. There's a couple of places where you actually go. You have to have a paid subscription to Rentometer if you actually want to run good rent comps. And we use the back end of our website, which has a bunch of stuff. We also have, because we manage almost 3,000 properties, we have a good idea of what things rent for generally. But on the sales side, if you weren't an MLS agent, if you didn't have your license active and didn't have active MLS access, how would you know what properties would trade for on the sales side?
Paying attention. So you can look at solds on Zillow. So I wasn't an agent until last year. So I spent 16 years of my life buying property without getting my real estate license. And the only reason I got it, I wouldn't recommend anybody doing it. I mean, you can get it if you want to. It's not helped me much except for getting on the MLS so I can, see. Occasionally, like, you'll get paid when you buy stuff. But what I've been doing is negotiating against my commission. So, like, think Matt, if you're an agent, you're listing this thing, you're going to get your 3%. I walk in as a buyer, and I generally would have my own buying agent, and I'm going to get 3%, or somebody's going to get 3%. But if I said, hey, Matt, you're going to get both sides. You're going to get 6%. And I just want the best deal for myself. You're going to get double paid. You're probably going to work for me the best you can to help me get the best price, knowing you're going to get double paid. Yeah. So that's what I would say. So if you want to get your license, that's great. That's great. I did it for 16 years. I bought over 100 houses in Tulsa and never needed it. But
you can still do that without being an agent. You just say, I'm unrepresented, and you can take my commission. You have negotiated 6% or 5% or whatever you've negotiated with the seller. I'm unrepresented, and I will let you take my commission as well if you help me get a deal on this house. And realtors they're commission driven. People are trying to feed their families. And so if you allow them to take that extra $3,000 or $4,000 or $5,000, they will work super hard to get a deal done.
Absolutely. Sure. So think of, like, I'm going to go buy a house, whether it's cash or if I've got financing or whatever. And I know I got a $25,000 budget for rehab, that I'm going to have probably a 25% overage just in case. Like, $3,000 is a drip in the bucket, for me. So might as well push that off to the other agent to ensure that I get the deal. So that way, at least I have a house to work on. So that's how I mess with it. You would ask about interest rates. I'm dating the rate, man. I say that rates are ineffective, right? Like, for me, It's a matter of if I buy the property, I think I told you this before, I've got a thick chunk of cash that I use that I've been using and just kind of rolling. So I'll buy a lot of these things in cash. I'll refinance it or I'll fix them up in cash. And then when I want the money back to go buy more properties, I'll take them as a package, take them to a local bank and refinance, get my cash back out of them. I did a $800,000 refi back in May, 775, 5-year locked term, 20-year term. So commercial. And so what'll happen is, I mean, I'm not going to, the moment it drops a quarter of a point, I'm not refinancing. It's got to be a significant amount, 6% or less before I decide I'm going to refinance this whole package. So do I see rates dropping? Sure. I mean, last week we saw them drop. I think the 15-year was under 6% at one point. And so I think it's tentative. Everybody's trying to figure out, are they going to drop interest rates in September, which I think they will. We'll see. They've teased us. We'll see. So I'm not too worried about it right now. If it cash flows, I'll put it this way. If it cash flows at 7.75, you just wait until it drops to 5.5. You're going to be rich.
Yeah.
Right.
Yeah.
So I'm not worried about it. I built my personal house and I got a 7% rate, and it is what it is. Right. But if it drops to 5, I'll refi, but nothing until then.
Yeah. I just wonder how we look when rates do drop to 5. Are we going to see a whole new class of buyer that's been sitting on the sidelines where they couldn't find deals at cash flow, now bidding up the price for properties that we're competing on?
I feel like that's the case, right? So I've talked in the past about, the 2008, 9, 10, like nobody was buying. I mean, if you're the bank, you're begging me, please, Max, buy my house, right? And 13, 14, 15, 16, 17, 18. I mean, like it was just the houses would sit and I would just wait for price drops and I would buy. Now it's a little bit different. You got people that are, it's different. You got Austin, Texas and Colorado. You got different buyers from different states that are jumping in there because we have cheap real estate. So I feel if a recession doesn't happen or some kind of strong reset that scares people off a little bit from real estate, the moment they drop rates, we're going to have 2021 right again. I mean, it's just going to be one of those things where, and that's the case. I've got 27 properties I've built up in the past 2 years. And I'm building it up subconsciously to think that if there's another run up of property and these houses I'm buying for 110 grand are back to 200, 250, I'm going to sell them all again. So that's kind of what's in my mind. I think there's going to be a strong shaking of the economy that scares people so that when the rates drop, that it doesn't hit like a gold rush like it did in 21.
But there's so many people that we get phone calls all the time, and Yoni and Hannah and I sit on calls from people that are out of state that are like, I'm looking for Section 8 properties that will cash flow $500 a piece and blah, 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 blah. Those people, we saw them in March of 2000 waiting for the bottom to fall out, and then they were going to buy a property. We see them now waiting for the bottom to fall out. They never end up buying properties. Meanwhile, you're scooping up properties. I bought one June. I'm buying one right now. Like I don't buy nearly as aggressively as you because I don't have the pipeline that you have. You just have people coming out of the woodwork to sell you properties. They just like hear your name and they just want to sell property. It's crazy. And I'd love to be able to do that, but I don't. So I buy them, if I can buy 3-4 a year, I'd love to do that. But those people that are not buying properties right now because they can't get $500 a month, they can't get $400. They can only do $300 a month. They will never actually get into the market. How do we convince those people that there's not going to be, what's the old expression? The best time to plant a tree was 20 years ago, but the second best time is today. Like you just have to at some point jump in. They're going to be listening to you, $500 free cash flow a month. And they're going to say, I haven't seen any deals like that. I don't know how to do those deals. But they still, even if you can't get something at $500 free cash flow a month, I feel like you have to at some point just sign on the dotted line, just accept deed and get started.
Yeah. Your first deal is the hardest deal, right? And I told you a story the last time we talked about this home run of 2 houses I bought that face TU. Like that's a once in a 16-year deal for me. Like that never happens, right? So I've got a metric of I've got to have at least, I'm buying equity, right? So I buy a house for $100,000, like I'm hoping that like if I sold it tomorrow with no work in it, that I'm selling it for 140. Like I've got to buy some kind of equity, even if I'm not making much cash flow. Like maybe if I'm making $200 a month cash flow, that I've bought $40,000 of equity from day one, right? Otherwise, it's not worth my time. I'm not going to buy a $100,000 house for $100,000 because now I've got to wait 5 or 10 years before it's got some kind of value. So I try to buy chunks of equity, and to answer your question, for the people that haven't jumped in or they can't find that $500 of equity, like you said, you've got to jump in and buy something. So that way you can start feeling and knowing what the market's like. Because I'll tell you, some of the properties that I was buying in 2017, 18, 19, and the rents were $700, it blows my mind that some of those are like $1,600 rents.
Right.
And if you would have just held on the market for 5 or 6 years, all of a sudden you got a huge run up in equity. So, and rent, that kind of stuff.
The first house that I ever bought in Boulder, Colorado, where my sister is still living, we went under contract at $430. That was a huge sum of money. And by the time all was said and done, we were at $465 because the sellers wanted to sell us their EV system, their solar array on top of their house, which of course I didn't care about because I wasn't going to be paying the electricity bill anyways. The tenant was, but nonetheless, we ended up paying $465. We got into it. The back of the house almost immediately, which is an unpermitted addition, almost immediately fell off, and we had to pay $80,000 to do that. So I'm in this thing for, call it $545,000. And that was 2015. Rents were $3,500. Our mortgage was $2,500. And fast forward 10 years, the properties, I just did a desktop appraisal at $950, which is crazy. And the rents are at $4,200 or $4,300. So I don't think that deal was a home run. We didn't initially think this is going to be a crazy deal. We had certainly a good amount of cash flow on a monthly basis, but fast forward 10 years and almost any deal you do looks like a great deal. Yoni always says on our team, hindsight's 2020. He says everything looks cheap in the rearview mirror. It does. It's like in real estate, it's so forgiving. If you are Max McGuirk and you make your living off of rentals, it's very important that you have equity built in when you start, that the cash flow numbers make sense. But if you're just a normal dude and you have a W-2 that pays for your living expenses and you're able to save a little bit of money so you can buy houses so that in 30 years you have a bunch of paid off homes that have tripled in rent, and the value of the home is appreciated significantly. 3% a year for 30 years is a pretty good compound return. Like, I just figure you almost can't go wrong. And so for the people that called me in March of 2020 that were like, I'm ready to buy, I'm just waiting for the bottom to fall out. And at the time I said, I don't have a crystal ball. You don't have a crystal ball. Prices could go up. They could go down. We don't have any idea. And it turned out that they went up 40% between July of 2020 and July of 2024, 45% or something like that. It's just like, at some point you have to just bite the bullet, sign the deed, sign the note, move on with your life, and accept $100, $200, $300, $400, $500 of free cash flow a month.
Yeah. I mean, you can't time the market. If I would have bought, I always say this, if I would have bought all the houses that were on the market that were worth 130 that I was buying for $80,000 in 2013 to 17, I'd be the richest man in Tulsa, right? But you just can't time the market. I bought a condo at the Reserve on Monkey Island for $70,000 in April. I closed in April of 2020. Pandemic hit. Everybody's freaking out. This one seller was from Tulsa. He was tired.
Where's the Reserve? The Reserve's right by Marine Max?
Right next door.
Yeah.
My tenant is right next door, works in Marine Max, right?
Yeah.
And so I remember I bought it and it was $70,000. I thought about buying the one next to it, but I just I don't know. I'll just buy just one, right? The cheapest one in there is $229.
Wow.
I mean, insane. And I wouldn't sell it. That would be the last property you'd pry out of my dead cold hands. I'm just never going to sell it, And so you can't.
I mean, there were times in 2018, 19, 20 when we were looking at wholesale deals back when wholesaling, there weren't as many people doing it. The market wasn't flooded with wholesalers. There were like honest people doing honest work is what it felt like at the time. They'd be transparent and they'd say, I've got this at 30. I need to sell it for 35. And you were happy to pay them a $5,000 commission for all the work that they were doing to make this deal go through. But anyways, we were looking at 2 deals. It was 2 houses, a client of ours, Miles, 2 houses, right on like just north of 244. So not where you buy, but I call it the near north. It's now turned into, a reasonably good neighborhood. And the wholesaler wanted 70 grand for two houses. It was like 35 a piece right across from each other, 829, 828 North Florence or something. And I remember the client and I looking at each other going, $35,000 a piece. I don't know. It doesn't even have a new roof. We'll have to spend $3,000 on the roof. Probably have to replace the 3-ton air conditioning. That's going to cost another $2,000. Now it's like somebody offered you for $35,000 a house that was rented and they rent for $900, $1,000 a month now. I mean, if somebody offered you that to get $2,000 a month in rent for 70 grand, you would jump on it 10 times out of 10. You wouldn't ask any questions. You wouldn't look a gift horse in the mouth. So it's just crazy how time goes by and everything looks cheap in the rearview mirror, as Yoni says.
And back to that point, man, like I think you've got to have that risk muscle, right? So like we talk about calculated risk. Like I'll go to River Spirit, I'll go to Vegas, go wherever, and I will not gamble. I'm very structured. That's just not my thing.
Those hotels don't build themselves with the owner's money.
No, like, and I get pissed when I lose $20. Like it hurts, Yeah. And so like, I like to say, man, when I make an offer, like it's calculated, I've done the math. There's no way I'm going to lose my butt, right? If I lose $200 because it's, holding costs or whatever, like I'm going to make that up in the next 24, 36 months of rent, that kind of stuff. And so like, I think that as somebody sitting on the sidelines that wants to go buy a property, you just got to go do it. Right. And what I tell people, I generally don't buy anything over 250 grand, generally over 200 grand. That way, like if the market does correct a little bit and the prices go down and rents go down, like it's like taking a $100,000 car, pulling it right off the showroom floor and then turn it in the next day. They're going to knock your head off like 30 grand, if not more. Right. Yeah. So you got a shorter distance to fall if you buy a less expensive property. So that's kind of how I focus on stuff. It's not the same type of house that I'd be buying and living in, but on the same side, I like to be safe. So I think somebody's just, if they're thinking about getting in the market, you just have to pull the trigger, see if it's right for you. And if it's not, sell and move on.
Yeah. Are you still seeing good activity in the contract for deed space?
I am actually. Yeah. Yeah. Like I told you, on the gentleman that was renting that duplex from me, I did an owner or contract for deed for him. I probably do 4 to 5 a year. I will tell you, we talk about like, have you ever gotten one back? I had a deal. I had spoke at a real estate investor meeting probably 2 years ago. It turned into 4 or 5 deals. And then I also had just purchased this house in West Tulsa, 46 in Vancouver, right? Mm-hmm. Not an area I normally would buy in, but it was a random phone call. And it was hey, a buddy of mine called. He says, hey, I got a 3-bed, 2-bath, 2-car, 1,350 square foot, 56 grand, take it or leave it. I'm like, wow. Yeah, I'll take it. And so, I probably, the ink hadn't dried. I hadn't had it maybe a week, 10 days. And I had a guy call me and say, hey man, would you do an owner finance? Would you buy this house in North Tulsa, which I hadn't had any yet in North Tulsa? He said, $82,000. It needs $30,000 or $40,000 of rehab, 2-bed, 1-bath, 800 square foot. And I was like, I said, would you rather like a 3-bed, 2-bath, 2-car, doesn't need that kind of rehab for 82 grand? He's like, absolutely. I'm like, cool, I got one. So I mean, I didn't do anything to the house, and from 82 to 56, I mean, you can tell the difference right there. Yeah. And I owner financed it to him, and he did a great job on the rehab. And I mean, I kid you not, like 6 months after we signed the deal, he got in a car wreck and he died June of last year, right? And a good friend of mine told me, he's like, hey, I know you're friends with this guy, and he just passed away. And I'm like, crap. And so, of course, like, his payments were on time all the time. And so this is September. What are we? August. So he died June of 23. This is August of 24. I've been keeping the thing, keeping people out of it. I've been mowing it often, just keeping it mowed and stuff like that. And so I've been in a probate that actually I've got a September 20th date that I will either get completely paid off for what the debt he owed me, and or if I don't get paid off, nobody bids on it, then I get the house back. It's free and clear on my end. And so anyway, those are some dangers, right? Like you don't ever think that like a 30-year-old guy is going to die tomorrow, right? Yeah. It doesn't necessarily mean you're going to get the house back tomorrow. So you got to wait for the legal process, So But generally what I do, especially knowing that now, I'm very, very careful on who I'm choosing. It's not, I'm not just saying yes to owner finance on every one of them, just because like it's been a little bit of a hassle to make sure that, squatters aren't breaking in and
for sure.
making sure the lawn's cut and that kind of stuff. So yeah, I definitely do it. I still am a 10% interest guy. I always sign documents just because, if it's worth, I'm trying to think of the best way. If it's worth talking about, it's worth putting on paper.
Yeah.
So everything's got to be signed up. So no handshake deals.
Yeah.
So, but that's base, man. I think there's still an opportunity now. I think when rates drop, it's going to be less attractive. So as the rates are still high, it's still a good time. So if there's anybody that ever has any questions, man, call.
How do they reach you?
Let's see, M Real Estate OK at gmail.com. Cell phone number. Do you ever give your cell phone number?
Sure. Go for it.
Yeah. 918-231-9343. Shoot me a text first. Generally, like I answer my phone all the time, but if you got any questions, say, hey, this is so-and-so. I want to ask questions about owner finance. Like I said, I use David Dreyer at True Title all the time. He does all my contracts. I help with the food pantry once a month with him. It gives me a free hour to talk to him, ask questions.
I love that
kind of stuff. So yeah. And
David Dreyer, he's a great guy. He gets a lot of tire kickers, so he might push you off at first, and once he knows that you're serious and doing deals, he'll give you his time. He'll help answer questions on the contract for deed stuff or the subject to stuff, and he's great.
Well, and he's super busy, man. He's got me like bothering him with 2 houses a month and probates and all kinds of stuff.
Yep. Max McGuirk's a former high school teacher who's been investing in real estate since he was 21 with long-term rentals. He's a serial entrepreneur. He owns and operates a DJ and photo booth company in Tulsa. Is that true?
It is. I was booking a Christmas party before I met you today.
I love that. And he was under contract and wrestled for the WWE after college in their developmental territory in Tampa, Florida in 2009 and 10. That's before he got into being a real estate agent and buying a ton of properties as a full-time profession. Max, we appreciate you being on the show.
Awesome, man. Thanks for having me.
Love it.
Yes, sir.
Thanks.
Thanks for listening to the Same Day Podcast. Tune in to a new show each week and be sure to subscribe to get future episodes.